Hey everyone, happy Monday. I want to discuss a dividend stock today. I own it and it's going to be returning $20 billion to shareholders over the course of the next 3 years. This particular dividend stock is a $100 billion company, and late night last night on a Sunday, I was up with my wife and we were watching the Starbucks investor presentation. This was the tail end of the 5.5-hour Starbucks investor presentation. This is my wife's new Starbucks cup, by the way. You can find these at Albertsons. This one is for Halloween. It glows in the dark. It's really cool. And we were watching it, and when I was watching this investor presentation with my wife last night, she commented, she's been a customer of Starbucks for a long time, as I have been, but she commented to me, Ian, after seeing this investor presentation, I really get it. I understand why you are so passionate about this company. Here's the mug I bought today, by the way. This is the Idaho one. I'm going to be giving this one away actually as a holiday gift, and I used my points at Starbucks to purchase this mug. By the way, I'm going to talk about Starbucks today, obviously. I promised all of you here on YouTube that I would go through part 2 of their investor day. And so I watched 5.5 hours of their presentations so I could condense it into a video, or 2 videos it is, for all of you at home. I will link in the pinned comment below to the last video I did about Starbucks, where you can see my summary from part 1 of their investor day. Starbucks is now my top position in my portfolio. I bought more shares today. I will share that trade in the video today. I know some of you have put in the comments you're tired of hearing about Starbucks because it's a quote unquote woke company. Hey, if this video is not for you, I do suggest this might be a good time to head on to another video. And in the next one here on PPCE, I will cover a topic other than Starbucks. But I do have a lot of ground to cover because I think their investor day is so valuable. I think their investor day should be part of MBA courses all around the world. It is some of the best presentations that I have seen in business, and I was blown away. So I want to share part 2 of their investor day and why it has given me the conviction to purchase even more shares of my number 1 dividend stock today, this morning, to celebrate Monday. Get ready, everyone, for an exciting video about dividend stock investing. Welcome to PPC Ian. This is dividend stock investing for everyone. All right, everyone. So first, some housekeeping. Just as Starbucks is reinventing their business, I am reinventing my dividend portfolio a bit. Nothing too major, but I'm making some trades. I have sold some positions, some really ancillary positions. I have used some of the proceeds to reinvest in my core, in the core of my portfolio that matters the most. And I'm sharing my portfolio transformation in real time with my corner patrons. I will link in the pinned comment below to my Patreon, where all of you can check that out if you're interested. And this Wednesday, I have another virtual Zoom meetup on Corner Patreon as well. And I already have some RSVPs, so that's going to happen for sure. It's going to be a lot of fun. It's going to be after work on Wednesday. And so I want to start the video today with some numbers. Check it out on the screen right now. This is the trade that I did today with more shares of Starbucks. I purchased more shares at $86.41 to celebrate Monday. It's 27% off its 52-week high, so I always enjoy that when I can purchase a core dividend stock that is not trading at an all-time high. It's a nice market we're in for anyone looking to actively acquire dividend stocks. And based on their earnings estimates for 2022 and 2023, it's trading at a forward PE of 30 this year, 25.9 next year. Certainly not a value at face value or at the first glance, but we'll get more to this later. The reason it's trading at these PEs is because the company is growing very quickly. And the dividend right now is 53 cents a quarter, or $2.12 a year. It's a starting dividend yield of 2.45%. The payout ratio is 74%. The 5-year dividend growth rate, which I love, is 12.1%. This is a dividend growth stock. The reason that this stock makes sense in my personal portfolio is because I don't need the cash flow right now, but I will in the future, and I am optimizing for long-term dividend yield on cost. And with that being said, I do want to take a step back because I do talk about Starbucks a lot. It is a large position in my portfolio. I have a lot of conviction in the company, and I've placed a lot of capital in the company. I am just sharing my personal journey here on YouTube for fun and entertainment. I've made mistakes in stock market investing before, as we all have, and so I'm just sharing my journey. I am not providing investment advice. I'm not a licensed investment advisor. I'm just sharing my journey here on YouTube for all to see. And so as you can see on the screen in front of you right now, I took some of the numbers from Starbucks Investor Day, and these are some of the numbers provided by their CFO, which was one of my favorite presentations, all the way at the end of the 5.5-hour Investor Day. And the CFO of Starbucks was sharing how for the next 3 years, the company expects earnings per share to grow somewhere between 15 and 20% per year on average. And so I do two models at the bottom of this screen. The first model assumes 15% EPS growth for years 1, 2, and 3. The model all the way at the bottom expects 20% EPS growth for years 1, 2, and 3. And so I just take a baseline. What is the earnings per share right now in fiscal 2022? Well, it's $2.86. And so, well, year 1, which would be fiscal 2023, what would that jump out to? It would jump out to $3.29. Year 2, what would it jump out to? $3.78. Year 3, $4.35. I'm just compounding here 15% on year for the next few years because Starbucks believes that their EPS, their earnings per share, it's going to grow somewhere between 15 and 20% for the next few years. And so anyway, by the end of the 3rd year, using a baseline, again, and this baseline is based on analyst expectations for 2022, using that baseline, I get to $4.35. And so if I take the current share price of $86.41 and I divide by 435, that puts a forward PE of 19.87 if they can grow at that 15%. But if they can grow at the 20%, the upper end of their guidance, well, that PE drops down to 17.48. How do I get that? I take 86.41, which is the current share price. I divide by $4.94, which would be the projected EPS at the end of these 3 years. If they continue at 20% per year for 3 years based on a baseline of 286, which is where the analysts see them now, and I get a forward PE of 17.48. This is why the company is trading at higher PEs right now, because some of this growth is priced in. Obviously, buying a dividend stock at a PE of 30, that wouldn't really be a normal occurrence for me. I tend to be a little bit more of a conservative dividend investor. I'll be buying dividend stocks with PEs in the low 20s. I'll be buying dividend stocks with PEs at 15, 17, in those type of ranges. But oftentimes people question me and they're, Ian, why are you buying this dividend stock at a PE of 30? Well, the reason I'm buying it at a PE of 30 is this just isn't any normal dividend stock. This is a company that is growing very quickly. It's a growth stock and a dividend stock in one. And the dividend stock, the growth stock that is Starbucks right now is pricing in that future growth. And so if I'm buying a PE of 17, 3 years out, would I say that's a deep discount on this company? No, but would I say it's a fair value for me being an investor who has a 20 plus year time horizon for this company? Well, my time horizon, quite frankly, is forever. But yes, that makes sense for me to buy up and pay for a fair value for this stock because it offers me yield on cost. And more than anything right now, I'm looking out towards the future. I'm looking towards the long run. I'm looking for long-term yield on cost, which makes sense for my personal situation. Now, I want to get into a few pros and cons with this company. I think it's really important. As you can see on the screen in front of you right now, I want to share a few pros and cons. And after that, I'm going to jump into the investor day that I spent so much time watching. And so there are some benefits of this business as I see it. It's an in-demand business, regardless of where the economy is at. I think the proof is right now. Our economy is facing some tough times, but the lines at Starbucks, the business, it is stronger than ever. And that was something that was covered in the Investor Day, that they recently had their best week ever in terms of demand. It's a model that clearly works. I've seen this throughout the Investor Day. I really can't wait to share what some of their business partners, their licensee partners shared during Investor Day. I thought that was one of the most illuminating messages because they have licensee partners all around the world. I was really blown away that they are seeing that this model works a lot better than some of the other business models that they entertain. And so you'll see in a minute, but it's a model that just scales and works. There's fast dividend growth. I'm a dividend investor. I care about current yield, but I care even more about long-term yield on cost. And with the fast dividend growth, which I believe is sustainable, that is a benefit and that is enticing to me. I really got from the second half of Investor Day that there is so much opportunity for global expansion. In some ways, it's a blue ocean opportunity, and their business partners, their licensee partners, they are more excited. Some of these licensee partners have been with them for 19, 20 plus years, and they are more excited about the future than ever before. It's a blue ocean opportunity, if you will. And what I would say, it's also socially acceptable. You know, sin stocks these days, they're not really socially acceptable, but drinking coffee, going to Starbucks, having that simple pleasure, you know, maybe it's not super healthy all the time to have certain beverages that are loaded with calories, but it is socially acceptable, and it's a socially acceptable, enjoyable break that anyone can take at any time. And so I enjoy those pros of investing in Starbucks. That's what attracts me to this business. Not everything that attracts me, but a lot of what attracts me, especially taking into the lens of what I viewed in the second half of Investor Day. Now, of course, there's risks, unionization, lockdowns in China. One of the reasons the PE is a little higher right now, quite frankly, is this last year has still been trying because there have been lockdowns globally. There is a lot of CapEx. You're going to see this as I go through the Reinvention plan, but there is a lot of CapEx that's going to be happening over the next few years. They are making tremendous investments, and this will affect their balance sheet. We will see it over the course of the next few years. I imagine that long-term debt on the balance sheet could be going up over time because they are expecting a lot of capital expenditures, and CapEx will affect their cash flow statement. It will affect their free cash flow, but they are saying that these investments are going to pay for themselves so quickly and so richly that they make sense. And we're going to see that as I go through Investor Day. And I would say the last con of investing in this stock, I guess, is the rich valuation. Of course, even though it's gone down from its 52-week high quite a bit, for someone looking to make a quick buck, a quick dollar by investing here, selling a year later, maybe it's possible, but I really see that, look, this is a long-term investment, and so I'm buying at a fair price here with a very long-term perspective, and it's important to keep that in mind because stocks go up and down. This channel in general is all about long-term investing. Quite frankly, dividend investing and core dividend stocks is all about, for me, long-term investing, and I think a lot of investors sometimes lose sight of that with the ups and downs that we can see day to day, month to month, or even year to year. Before we continue in the video, if you enjoy these videos, please go ahead and smash the like button. It means the world to me. I literally put in hours and hours of research for this video. Not only did I watch the Investor Day for 5.5 hours, but also just preparing these videos takes forever. Your support means the world. Also, don't forget to subscribe. I have new videos on the way all the time. This is PPCE and dividend stock investing for everyone. So I want to delve into the second half of Investor Day. Again, I will put the first half, a link in Patreon below. If you're tired about hearing about Starbucks, about this quote-unquote woke company, I do apologize. I will have more videos on the way, but I do want to share this passion of mine. Regardless of whether someone invests in Starbucks or not, I think their Investor Day was incredibly worthwhile to see how a world-class company should be operating. Quite frankly, as I view any of the companies I own, as I go through any of them, like McDonald's, like Couche-Tard, like PepsiCo, I will be looking at them all through this lens. The Investor Days at all of those companies should be at the Starbucks level. That is the gold standard in my humble opinion. And so as we continue, check it out on the screen right now. And so the second half of the Investor Day, as I was watching it, started with John Culver, their North America Chief Operating Officer. And so I have the first slide from him. What was so exciting to see, they're going to be investing $450 million just in fiscal 23 in their existing store base in North America. And so these are huge numbers. This is huge capital expenditures. We're going to see it on the balance sheet. We're going to see it in the cash flows. We all have to keep that in mind. But what I have found about Wall Street, especially in the last decade, is Wall Street is looking forward. And Starbucks is taking steps, making investments now to maintain their leadership position for the future so they can offer investors and continue to offer investors long-term dividend yield on cost. And believe me, their CFO highlighted that dividend, and I'll get to that at the end of the presentation today. What I love, as I had suspected in a few videos ago, that I will also share in the pinned comments, they are investing in automation. They are going to be rolling out a proprietary cold brew system across their entire U.S. portfolio. There are meaningful savings in time for their partners. This will allow the partners to have more time to connect directly with customers. The partners are going to have a better experience, and they're going to get what they call better labor leverage. And so what this means, and it's interesting, and so it's a fine line. They have to be careful with their messaging, and what they always messaged throughout the entire presentation is they want to make the partner experience better than ever. At Starbucks, a partner, by the way, is an employee. Most of their partners are what they call green apron partners, which are the baristas. They are trying to invest in the partner experience because they know happy partners make happy customers, and happy customers spend a lot more money at Starbucks, which shareholders like myself love. But what's interesting is they are talking also about labor leverage. What labor leverage means is the labor they have can do more. Labor can sell more, can drive more sales, can do better. Potentially, hiring doesn't have to be as quick in the future because with the labor they already have, they can do more. That's what labor leverage means, and that's why automation is so important, and that's why they are investing in their cold brew technology, which scales down the amount of time it takes to produce these cold brew beverages. And so, again, they have to go on a fine line. One, they have some unionization issues, and so they have to invest in their partners, and they know that the partners are the core of the business, but also they want to get more leverage, more labor leverage for the future. And so you're going to see a undertone of automation throughout their investor day. And I think they do a great job of how they communicate this, because the existing partners are going to be so much happier with a more fluid job that is better, is more enjoyable. But in the future as well, they are not necessarily going to have to staff up quite as much as they have in the past because the labor will get more leverage. Let's keep going. As you can see on the screen right now, the second half of John's presentation, he talked about their Siren System. And what was so interesting is they brought in Sarah Trilling, who's the president of North America, and they talked about their Trier Center. They have a Trier Center, which is basically their laboratory, if you will, where they try new innovations, new drinks, all kinds of new stuff. This is a tech company. Please, this is not just a restaurant. They are trying new inventions all of the time. And they have new technologies, both for their app, but also in how they produce beverages. And they did a head-to-head test. Their old Mocha Frappuccino system would take about 83 seconds to make a Mocha Frappuccino. And I love Mocha Frappuccinos. That's one of my drinks that I really enjoy at Starbucks. I don't have that one too often, but when I do, I enjoy it. And it took 83 seconds by one of their seasoned baristas. They showed the new system, and that only took about 35 seconds. And so they are deploying this new Siren System at Starbucks that will allow them to make these beverages quicker. This is labor leverage, everyone. This is going to shorten lines. It's going to improve customer experience. It's going to make the job of the barista a little bit better, and it's going to allow baristas to serve more customers. They won't have to hire so much labor in the future because the systems are working better. Now, they talked about making egg bites, and they said the traditional system is about 2 minutes. We all know that if you've been at Starbucks before and you've waited for them to heat up the egg bites. The new system, it reminded me of that store, Pret, in the UK, where basically it was kind of ready. The food is just ready to go. And so the new station under the new Siren System for these egg bites is, if you will, it basically reduces packaged waste. It warms it up, it's ready to go. There's basically no wait. So it takes 2 minutes down to essentially 0 minutes. And so that was really exciting to see. One of the things as well, I try to highlight on here all of my best insights. A lot of them are bolded as well, that John shared, is they spend $50 million a year just on labor to brew cold coffee. And so that's a huge amount of labor. These new systems, this new Siren system is going to reduce a lot of those expenditures so that their baristas their partners, their green apron partners are freed up to spend their time on more exciting endeavors such as building relationships with customers. They see, surprisingly, an abundant U.S. growth opportunity. New stores, East Coast mainly, and 3 to 4% net new store growth over the next 3 years. They see drive-thrus growing very quickly. New stores take CapEx. It's expensive to open new stores, but they're seeing a 50% return on investment on those new stores. They're seeing 25% cash margins. They're seeing 2-to-1 sales to investments on those new stores. And so, yes, there's going to be a lot of CapEx short run, but the new stores are paying for themselves pretty quickly. Starbucks North America in the next 3 years, they're seeing 2 new stores a day, 40% revenue growth. Over the next 3 years, let me repeat that, 40% revenue growth. And they're seeing progressive margin expansion. Do you start to understand why I get so excited about this company? Do you start to see why, despite some of the challenges they face, every business faces challenges, this is not only paying a hefty starting dividend yield, or a reasonably good starting dividend yield. I guess I shouldn't call it too hefty, but for me, it's pretty meaningful just because of the size of my position. But you can start to see how they're going to be able to continue to grow that dividend over the long run very meaningfully. And maybe over the next few years, the growth won't be quite as big because they have so much CapEx that they're spending on all of these new innovations. But over the long run, I could see the dividend from here on out. I expect it to at least double. That's why I'm investing in this company for long periods of time. And I get so excited about that. I want to keep going. I have a lot of ground to cover. And again, whether you invest in Starbucks or not, that doesn't really matter. The point of the video today, quite frankly, is to see how a world-class team operates. And it's also to see how an investor gets excited about a company and understands the company that he invests in. I do that by staying up late on a Sunday night with my family watching the investor day. That's what it's all about, being a dividend investor. And I want to take a side note on that, actually. One of the things I found as a dividend investor, above and beyond the benefits of just the financial value that it brings to one's life, what I found as a dividend investor is I keep learning, I keep getting better, not only about just investing in money, but just about business, about operations. I find myself in my mind more often. I find myself looking around me in the world more often, just, hey, it's interesting how that works, or how could that work better, things like that. And it's so exciting to build all of that knowledge through the practice of dividend investing. But what I will tell you is there's a downside, and this is something I've noticed in more recent years, especially more recent months even, is you start to kind of become a better person in many ways, more intellectual, more well-versed on just how things work, more business savvy. And when that happens, you'll start realizing, boy, you want to find almost a whole new circle of peers who are kind of at your level in some ways in business. And I'm not trying to put down anyone or anything, but I'm just saying this elevates your life. And when they say it's lonely at the top, I've honestly, you're going to start feeling this as a dividend investor. At least I have. And that's why one of the reasons I built this community, so dividend investors have somewhere to go to talk to other people about topics like this, because we're a rare breed out there in this world, at least. So anyway, I want to keep going, everyone. I hope you're enjoying the video. Check it out on the screen. I got so excited when I was watching this presentation, and Belinda Wong, their chairwoman of Starbucks China, was speaking, and she talked about what they are doing in China. And the number one thing that I thought, or there were two things that I thought were so exciting. One was just in China per capita, they are drinking 12 cups of coffee per year. And Starbucks is estimating that'll go to about 14 cups of coffee per year per capita by 2025. By contrast, in Japan, consumers are consuming on average 200 per capita coffees per year. US 380 cups per capita per year. Hey, I'm one of the driving forces in the U.S. probably behind that number. It's so funny. But Belinda goes on, as you can see on the screen today, that in fiscal 2022, they have 6,000 stores, 60,000 partners, 40% of their sales come digitally. Again, this is a tech company, 80 million registered members, 15 million past 90-day active members. It's a record high customer connection scores that they're having. But by 2025, they're going to grow to 9,000 stores. They're going from 6,000 stores to 9,000 stores in just a few years. 50% growth versus fiscal 22. They're going to 300 cities. They're opening one new store. This is the second fact that I thought was amazing. In addition to the per capita coffee being so low, as their middle class grows, China middle class is going to grow. And that per capita, at only 12 coffees a year, there is so much opportunity there. I can't even imagine 12 a year. Oh my goodness, I could go through 12 in a week or two. But what's so interesting is they are opening a new store in China, as you can see on the screen. Every 9 hours. I can't even wrap my brain around this. This doesn't even talk about China this doesn't even talk about Starbucks as an entirety. This isn't Starbucks globally. This is Starbucks China. They are opening one new store every 9 hours, and they're only doing this because they are so profitable. Oh my goodness. They're seeing 2-to-1 in new store sales to investment, and they're seeing a payback period of less than 2 years. Yeah. Less than 2 years payback period. Thank you, Belinda. Thank you, everyone in Starbucks China, for what you are doing. It is amazing. Let's keep going. As you can see on the screen right now, I get so excited about this. Belinda goes on. But that's not all, as they used to say. There are 5,000 We Proudly Serve Starbucks additional points of distribution in China. They are in 550,000 supermarkets and convenience stores. They are seeing 30% compound annual growth rate in e-commerce growth in China. They are forecasting 170 million registered users by 2025 in e-commerce on their app. They are trying to 2x their past 90-day active members versus fiscal 22. I love this. I think in China, it's kind of probably similar to the Trier Center in the US, but even bigger. By 2023, in the summer, they're opening the China Coffee Innovation Park. They are going to innovate. And what was so interesting, what Belinda was talking about, is they localized their innovations. In China, all around the world, quite frankly, consumer preferences are different. And so Starbucks is optimizing locally. What was so fascinating is actually they were saying every Starbucks store is unique. So they have all these stores around the world, but they're all a little unique, a little different, because they're the neighborhood coffee place to go. The vision for 2025 is 2x net revenue, doubling. So here's the deal. Between 22 and 25, they're doubling revenue. Why is it trading at a PE of 30? This is why. They are doubling revenue. They are 4xing operating income. They are 50% growing their stores. They're going to have 95,000 plus partners in China. Oh my goodness. But it doesn't end. And so people ask me sometimes, Ian, do you invest in international companies? Absolutely. I invest in dividend stocks that are based all over the world, but I also invest in dividend stocks, companies like Starbucks that are based in the US, but are global entities. And so I have exposure all around the world by just investing in this one company. But I want to keep going. So Michael Conway went next, and his presentation was one of my favorites, as you can see on the screen right now. What Michael shared is he's the group president international, and it seems like he focuses a lot of his time on markets other than China, probably China as well, but he talked also quite a bit about their licensee partners, their licensed stores. And this is something I didn't really understand as a Starbucks investor until last night. And when it clicked for me, I bought more shares this morning in a major way, quite frankly. It wasn't a small tranche I bought today. I'm going all out. This stock, maybe it'll be 20% of my portfolio within a few years. We'll see. But Starbucks International, they're in 81 markets. They have 200,000 partners, 18,000 stores. It's greater than half of all Starbucks stores stores. So again, that just goes to my point that I bought a U.S. company, but this is an international company. It's a global company. More than half of their stores are based outside of the U.S. Anyway, what was so interesting about what Michael was talking about, well, I'll get to it in a minute, but first, I guess they're driving momentum. Revenue, they're expecting to be up 30%, operating income up 50%. They're going to be opening 600 plus net new stores. And here's the deal, though. 56% of their stores internationally are licensed. What does that mean? So in certain markets, such as Latin America, in the Mexico region, for example, what Starbucks did a long time ago, this was like 20 years ago, is they formed these strategic partnerships, not with just some small operator, but with large, multi-billion-dollar operations who really understand the local market. And they actually brought to this investor day 3 of their partners to speak, and all 3 were so excited about the future, and they are seeing such good results, but they partnered with people who are local, and they found that through these licensee partners, they can get better scale, better efficiency, better operations through folks who truly understand the local markets. And so that's what these licensees are. But as you can see on the screen right now, they brought 3 of them to the investor day. One is called Alsea, one is called Alsea, and one is called Shinsegae. I hope I said those correctly. I was blown away by all 3 of them. And these key licensees, Alsea was 20 years of partnership. Alsea, 22 years of partnership. Shinsegae, 23 years of partnership. These 3 companies comprise 5,000 stores in 27 markets. Again, these are not just some small operators. These are experts. And Alsea has 750 stores in the Mexican market. They said they love the unit economics of the business. They have other stores that they operate, and they found that, and this was a recurring theme from all of their business partners, that they all have the best unit economics, the best results with Starbucks. Alsea is a Kuwait family-owned business. They have 17 international brands in 13 markets, and they said Starbucks is very unique on a unit economic basis. And Shinsegae, this started off as the retail arm of Samsung. Now they broke off. They're a customer lifestyle company. They own businesses across like fashion, retail, cosmetics, residential, construction, IT. They own 1,700 Starbucks stores. They are saying it's self-funding from a financial point of view. And they are saying at Starbucks, they have the highest daily interaction with their customers. And it was a recurring theme from all 3 of these partners, from the high ups at these companies, that, hey, this is just the beginning. We've been partnered with Starbucks for 20 plus years, but this is the beginning. We see a blue ocean opportunity, if you will, for international growth. And so that was exciting to me as someone who can afford to wait around for 10 years, 20 years, 30 years to see what this company, where it could be in 30 years from now. I hope one day my kids, even after I am gone, they can reflect back, they'll still own these shares in Starbucks, and they can reflect how far this company has come. This is a growth company. Let's keep going. As you can see on the screen, the second part of Michael Conway's presentation had a few more key facts. In Korea, this is where I think the third partner, Shinsegae, was really thriving. They are seeing record new store growth for the foreseeable future. They're seeing more opportunities for growth than they've seen in the last 23 years. Alsea was saying versus 2019, which is the pre-pandemic comp, they're growing double digit in all markets. They're opening a new store every 48 hours. Let me repeat that. This is a licensee partner of Starbucks. And I'm not talking about Starbucks just themselves. This is just one licensee, and they're opening a new store every 48 hours. This is a growth company, but it's also a dividend company. It's a dividend growth company. International licensed markets, what I love to see is only 1 in 10 transactions is coming from digital. They see just tremendous opportunity growing digital. on a lot of these licensees right now, they're not really using the Starbucks app. It's not a big driver of sales in their stores, yet their stores are still just outperforming almost every other line of business that these licensees are in. Just imagine what's going to happen when the app is introduced. And that 1 in 10 goes to 5 in 10 because the app is sticky. We know that when customers use the app, they spend more money. We know that they have more brand loyalty. And what Starbucks is trying to do is have a seamless interaction that whether you're here in the US or you fly down to Mexico for holiday, for a nice vacation, you can still use the app seamlessly between those markets, making it a great experience for the customer. Let's keep going. I have more ground to cover from this Investor Day. If you're enjoying the video, don't forget to smash the like button. I hope you're enjoying it. Again, even if you don't believe in Starbucks, you don't invest in it, there's a lot of value to take away from these presentations. Check it out on the screen right now. The next thing I want to go through is Chanda Beppu, their VP of Global Channel Sales, Channel Development, talked about their at-home business where they basically sell coffee, at your supermarket where you drink it at home. I have that a lot of the time when I don't have time. Look, I'm at the point in my life where I'm drinking Starbucks almost every day, but a lot of the time, I don't have time to go into Starbucks, so I have the Starbucks at home. Chanda was saying that 70% of the global coffee opportunity is actually not even in store. It's these at-home opportunities. And they are seeing 19% compound annual growth rate in system-wide sales for at-home coffee. Let me repeat that. They are growing nearly 20% per year on average in system-wide sales for at-home coffee. And they're saying they still have a relatively small market share with tremendous opportunity for growth. They said they're the number one U.S. at-home coffee brand, so that almost seemed contradictory. Hey, you're number one at-home coffee brand, but you still have a relatively small market share? Wow, those two kind of contradicted for me, but I guess, they're leading the pack, but they still believe that there's a huge opportunity there. And it was fun to see that Nestle and PepsiCo are their partners for at home. 28-year partnership with PepsiCo. That's another thing worth mentioning is sometimes you think about Starbucks and you think, hey, it's just some newer company and it's only growing quickly because it's newer. No, this company's been around for, I believe, around 50 years. And of those 50 years, 28 of those years, they've already been partnered with PepsiCo, which is another stock I own. Last year, Creamers grew 24% year over year. It's a $200 million business, Starbucks Creamers. They're the number one global brand in ready to drink, on and on and on. They recently made a move into the energy drink category with the Starbucks Baya. And they're looking for global channel development to double. They're going to double this business by 2030. Again, we're seeing very bold numbers here. Hopefully they hit them all. Usually, in my experience as an investor, companies don't put forth numbers that aren't somewhat attainable, or I don't think they would put numbers forth that were completely out of the realm of possibility. That would be foolish. And so these are bold goals. These are ambitious goals, as Howard Schultz said. But I don't think, again, they would put them out if they were completely ridiculous. And so it's exciting to see how quickly they're growing. And I think if you spend any kind of time at Starbucks like I do, you probably see this on a day-to-day basis. That's why I like the company. I want to keep going. As you can see on the screen, they have a new CTO. Her name is Deb Hall Lefevre. She comes to them from McDonald's and then Couche-Tard. Two stocks I own, two stocks that are great with tech. And I think there's probably a lot of value that Deb brings to the team. She's newer to the company and she came kind of to speak later in the day, so I didn't pull as much from her presentation, quite frankly, because I think it was a lot of repeat of some of the other presentations that other folks at the company had already shared. But one of the things that I took away from Deb's presentation is that right now, the partners, they have to look at a lot of different screens. Some of those screens are kind of clunky. She is aiming to reconfigure their technology. So it's all basically on tablets. And you can kind of view the same thing on any screen. And it can make it a lot easier for the partners to do their job, but also to engage with customers. And it's going to increase productivity. It's going to make partner satisfaction better. one of the things she talked about that was kind of cool is they have a whole back-end app for partners where they can determine their career path. And a variety of different career paths are fine. You have partners who want to rise through the ranks and one day make it to these executive levels. But you have other partners who want to work more as a lifestyle business where they have a job, but they also have responsibilities at home, a lot of them. And so they kind of want to have more of a traditional job where maybe they grow over time or maybe they don't grow over time, and that's fine as well. And so Deb is working on those types of back office engagement opportunities to make sure partners are happy as well. So a lot of technology. And I thought it was important to have because I've seen some of those screens at restaurants before, and yeah, it looks like maybe they're on some monolithic software, older software. She's going to standardize everything on more modern architecture, which is only going to improve things for the team. And Starbucks has always been a leader in technology and innovation, and I hope that she brings a lot of value from McDonald's and Couche-Tard and just her vast experience to the table at Starbucks. I want to keep going. As you can see on the screen in front of you right now, the last presentation that I went through, this is before Q&A, and I don't have much to cover or anything to cover from Q&A, quite frankly. Honestly, I started tuning out in Q&A. It was getting a little boring by that time, but all of the presenters were just fabulous. But Rachel was, Ruggeri, she was a highlight from the whole thing. They closed it out with the heavy hitters here, and Rachel is their CFO, and she basically closed it all out with the numbers. Boy, it's a new era of growth. They're going to grow the EPS 15 to 20% per year over the next 3 years. This is up from their prior guidance of 10 to 12%. They're going to be growing comps, which is same-store sales. They're going to be growing. They're going to be having more stores. That's store growth. They're going to be improving margins. They're going to have disciplined capital allocation, although there's going to be a lot of capital, a lot of CapEx. And so she said that from fiscal 23 through 25, they see 7 to 9% in same-store sales growth globally. They're just going to be having higher tickets, more higher attachment rate, folks who come through the stores buying more product. I love that. They're seeing 7 to 9% in US, 4 to 6% in China. She said they're accelerating their global store expansion. Globally, 7% increase in stores per year. Wow, that's a lot of stores because they already have a lot of stores. They're saying China, 13% growth. She's seeing 45,000 stores by the end of fiscal 25. By the end of fiscal 30, they want 55,000 stores. They're going to open 8 stores per day. Oh my gosh, let me repeat this. This is the statistic. 8 new stores per day. I can't even fathom that. This company, every day, globally, they're opening 8 new stores. That is insane. That is such growth. Let's keep going. As you can see on the screen right now, revenue growth, 10 to 12% annually through fiscal 25. And this is this is a channel about dividends. This isn't a growth stock channel. This is a channel about cash flow. I don't plan to sell stocks. I love seeing the share price go up and have a bundle of money in these dividend stocks, but I invest for the dividends and for the cash flow that I can use to go to Starbucks and never have to pay for Starbucks ever again, among other things. And so basically, they're remaining committed to a very compelling dividend. I love how Rachel highlighted that dividend. And she's targeting a 50% earnings payout ratio, 2% at least dividend yield. They're going to be resuming their buyback program. And she underscored more than once that dividends and buybacks, they'll be returning $20 billion to shareholders over the course of the next 3 years. And so, boy, they are going to be firing on all cylinders at this company. Let me know in the comments below what you think about their Investor Day. Corner patrons, I already uploaded this for you, but I uploaded this morning all of my notes to Patreon for all of you. I love you all. Check out the announcements on Corner Patreon if you want to enjoy that meeting on Zoom this Wednesday. I love you all. Thank you for hanging in there. Work has been busy for me lately. That's why the cadence of the videos has been a little slower, but also I can't do a video unless it's my best work. And a lot of work goes into these videos. And so I hope you appreciate the quality of the videos. I know the cadence isn't quite as high as all of people out there would want. And honestly, I feel guilty too. I want the videos out more frequently. Please go ahead and smash the like button. It means the world to me. Please go ahead and subscribe. Before I go today, I want to give a full disclosure. I own the stocks mentioned today. I'm long Starbucks, ticker SBUX. I'm long PepsiCo, PEP. I'm long Couche-Tard, ANCTF. For all of my homies out there in Canada, smash the like button and chime in below in the comments if you're from Canada. I love you all. And check out Brandon Beavis too. He's the best Canadian investor, and in my opinion. And also in terms of full disclosure, I'm long McDonald's MCD. I enjoy these restaurant stocks. I really do. Also, before I go, in terms of a friendly disclaimer, today's video is not investment advice. I'm not a licensed investment advisor. Today's video is just for your fun and entertainment. If you're going to go out and invest in the stock market, please consult your licensed investment advisor first. I'm just sharing my personal journey. And certainly I have a large position in Starbucks. I'm just sharing my personal journey about that. It's possible to lose money in the stock market. Thank you all for watching. I love you all, and I'll see you in the next dividend stock investing video.